Hello, all. This is what is posted as a kind of business concepts by one of the students. And this student is saying that she and her husband have a house and they want to rent this house out for $1,000 a month. And they want to know how their financial statements look like. One thing they want to know is about their income statement, how much money comes into the business, how much money goes out of the business, and how much remains, in terms of revenues and expenses, profits, sometimes they call it profit and loss statements. And let's see what their income, is. In rental, $1,000 for 12 months, that's what they get in 1 year. However, they have expenses, insurance, property tax, registration of business. That means they are using the property as a business, and the business and occupation tax, 1% of 12,000 is $120, and other expenses like legal fees. The total expenses in 1 year that they have is 5,700. Just think about it as a rough estimate, 6,000. That means they are getting $12,000 of rent. They have to pay out $6,000. Some of these fees might be one-time fee, just like business registration, But the other things, of course, are, would continue. Property insurance, they are, Therefore, they are, the net income that they have is $6,000, which is around $500 a month. Now, their balance sheet looks like this. This is the property. Imagine they own the house and they say that there is not any mortgage on it. That's $150,000. And then when they want to start their business, it assumes they bring $5,000. Of course, they can bring less, And also, major fund, they put, and that is $1,500. Therefore, the total assets of their company, are $150,000, $56,500. Now, we know that out of that, they have to pay taxes, insurance, and property taxes, and the liabilities that they have is very limited because these are the insurance that is covering, and taxes, they are not significant compared to their total assets, which means their owner's equity is very high. By saying very high, if you look at this number, is almost close to the assets of the company. Why? Because they don't have any mortgage. The house is already paid for. That's why this owner's equity is little less than the total assets, and all because they have minor liabilities to pay quarterly for the insurance and those things. Now, we look at the cash flow statements. That $12,000 cash inflow, this is the cash that is coming to the business, and these are the cash that goes out of the business, which means the net cash flow, which means that at the end of the year, their cash flow will be, they will have $6,000, cash available to them. Therefore, and this is what ChatGPT is recommending, which is great in, recommending, insurance and, registration. And it is aware of the costs at the state because, and then, giving you advice on other issues. If this person has some other issues, suppose might go back and say, oh, our AC is broken, this is the central air, therefore, what do you recommend? Where should I repair it? How much should I spend? Where should I get money? Can I get the money from the bank? Therefore, it can discuss it with ChatGPT, which memorizes whatever she has already put. Therefore, gets the information, and that's the way to utilize ChatGPT for financial statement or for many other issues.